Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Wednesday, July 12th, 2023. Before I click through all the charts and show you all the details, I just want to encourage you to please click like if you haven't already. Please subscribe to the Wicked Stocks YouTube channel, and please share the content if you would with friends and colleagues. Also, check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis and the Triple Q and the SPY, weekly analysis on the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock pick videos every week that you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 month near-term investor, always looking for 20% moves on those underlying stocks. Check out wickedstocks.com. Now, let's take a look at the charts. Weekly bar chart I'm starting with. Just a reminder that 2, 4, 6, 7 weeks ago, we settled above this 18-month channel top, now at 191.39, well below the market. The initial midterm big picture objective was this 284.01 rising channel top that is projected off the January lows. 284.01, this formation we've been testing now for the last 4 weeks essentially, but really 2 weeks inside of the last 4. We've been testing, pushing through it a bit. On the daily chart, we even closed above it once, but not by the required 1% margin. By the way, 1% above 284.01 is 286.85. I like to use 1% violation thresholds on longer-term line studies. 284.01 is certainly a longer-term line study, and if we close above 284.01 by the 1% margin, even on a daily basis, but certainly on a weekly basis, 286.85 or higher, the market has indicated 3 to 5 months bullish continuation to the 414.49 November 21 all-time high. I personally think that having settled above 191.39 will keep 414.49 in reach over the months ahead anyway. It's just that closing above 284.01, this formation at the end of a week is an accelerator to that effect and should yield this 414.49 within 3 to 5 months. So if we were to close above 284.01, you could consider reaching for 415 out of the money calls that don't expire for at least 6 months. Inversely, as I've been saying all along, continued testing of 284.01 will keep the low 190s in reach. We could fall all the way back into this zone over the next couple of months. And so there's still a rationale for buying, say, 190, 195 out of the money puts that don't expire for at least 3 or 4 months. On the way down, we would have a sell signal if we were to close below this 247.96 formation, which on the daily chart I can show right now at 249.93. So lower right, you can see I've got that area as a weekly support zone that if tested, and it is considered a 1 to 2 week target still, below the 283.51 formation, 284.01 on the weekly chart. I mentioned a moment ago how last week we did close above this structure for a day only and backed off. And when we did close above it, not by a 1% margin. So now we're kind of working into the day itself. 269.55, simple trend line off these lows. Intraday support still able to contain intraday weakness, above which we can quite easily reach to 276.93 today. If you look over to the far right, 276.93 and nothing more than a 5/8 upside Fibonacci over the last week's extremes. It can contain intraday buying. We might actually trade inside the 269.55 to 276.93 region all day long. If we push above 276.93, 283.51 is in reach today, part of a range up to 284.01 that once again can contain buying not only into August trade, but possibly into the fourth quarter, the next couple of months, as we could ease back into the lower 190s over the next several months. Once again, it would be a settlement below 249.93 and 247.96 on the weekly chart that would clearly indicate the low 190s within 3 to 5 weeks. But if you're more of a 1 to 2 week swing trader, we're right in the middle of our two big points, the 283.51 level and the 249.93 area. If we break or open today below 269.55, I do think this long-term speed line on the weekly chart at 263.63 is likely to be tested and can contain session weakness. There are minor points we've got scattered about, well suited for aggressive day traders who just want to scalp a 1 point, 3 points, whatever the case may be. But just know that if we break that 269.55 trend line here, we can within the day test 263.63, where a daily low can be placed. And if we do close today below 263.63, I think by Friday's close, we could actually test this 249.93 channel bottom, which on the weekly chart is 247.96, able to contain selling through next week. So if we do test this upper 240 support over the next 3 to 5 days, you can take profits there if you've been short since the mid 280s. I'd been mentioning when we were testing the mid 280s or low 280s at the time that you may consider reaching for 245 or 250 out of the money puts that don't expire for at least several weeks. If we were to push into the low 280s again, that is still the play, but now it's more like 249, 250 out of the money puts that don't expire for at least several weeks. If we meet that objective at 249.93, you can take profits, cover those puts, perhaps, or at least part of them. There's nothing to say that we might not close then below 249.93, in which case you either reach for 190 out of the money puts that don't expire for at least a couple of months, or you're already long those out of the money puts you may have bought a couple of weeks ago and just hold on to them for the ride down into the low 190s. Presumably that would be about a 3 to 5 week sell signal.
Discover the secret to investing success with Wicked Stocks, your trusted ally in navigating the dynamic world of the stock market. We harness time-tested charting techniques, previously only privy to professional traders, to deliver high-precision buy signals that eliminate the guesswork from your trading decisions. Earlier this year, when Eli Lilly was on a 4-month free fall, our members were tipped off with a buy recommendation as the stock was merely testing 1-year channel support. Fast forward 7 weeks, and they were sitting on a delightful 28% return as the stock hit its targeted channel resistance, and it's still climbing. Then came Amazon. In mid-April, we signaled an important buy opportunity right as it closed above speedline resistance. 10 weeks on, and the stock is cruising upwards, already netting a 30% increase. With Palo Alto Networks, our members were given the green light on a vital buy signal as the stock broke through its channel resistance. Just 5 weeks later, our target was hit with a profitable 20% return. By joining Wicked Stocks, you'll get access to 2 exclusive stock picks every week, alongside daily analysis in the SPY and Triple Q, as well as weekly insights into the S&P 500, NASDAQ 100, and the long bond ETF, the TLT. Make your next move with confidence. Discover what it means to invest with insight. Don't wait. Start your journey today. Visit us at wickedstocks.com, because smart investing isn't just about chance, it's about making informed choices.
Now, once we test the 249.93 area, if we do, you could, if you're an aggressive two-sided trader, you trade both sides of the market, maybe you trade options, you could reach for 283, 285 out of the money puts that don't expire for at least several weeks. It would be a 2 to 3 week move, perhaps back to 283.51. But I'll just remind you that this 284.01 channel top is a meaningful area of resistance, and it carries with it the possibility full bearish rotation back to the channel bottom. And so I just wanted to keep reminding you of that not unless we close above 284.01 by a 1% margin, even on a daily basis, do I see a sign for aggressive gains as we move into later year. Our initial target within 2 to 3 weeks would be this 313.60 to 314.66 region, this kind of August of 22 shelf top high series, able to contain weekly buying pressures when tested. We could even fall off from here back to 284.01, this channel top, within several weeks. But honestly, a close above 284.01, I do think, as I said earlier, carries with it 414.49 over the following 3 to 5 months. I don't know if there's really anything else that needs to be said. I'll just remind you, I'm not going to go to the charts, just that we are two-sided today, 269.55, decent intraday support, above which 276.93 in reach, where we can top out for at least part of the day. If we break 69.55, 263.63 is likely, where we can place a daily low. Closing below 263.63 signals this upper 240s targeted 1 to 2 week objective below 283.51 within a matter of 2 to 3 days at the most, where we could bottom out through next week, possibly the balance of July trade. Upside, if we push or open above 269.93, we can reapproach 283.51 to 284.01, where once again we can top out through August, and below which this market remains susceptible to falling back into the 190s over the next several months. And that is all I'm going to say for Wednesday's Tesla report. Please click like, share, subscribe, and check out wickedstocks.com.